Welcome back, friends. Preparatory legal account step. Open a taxable margin brokerage account that supports options TDA, Thinkorswim, interactive brokers, Tastyworks, Schwab. Complete the broker's options approval form. Brokers assign in options level and will require income, net worth, experience information. You must be approved before order will be accepted. FINRA or broker rules, selection and setup. To choose the underlying, pick a liquid ETF or index or large liquid stock SPY, QQQ, IWM, AAPL or common. High open interest and tight bid ask spread reduce. Executive slippage. Third, pick time frame, use 30 to 45 days to expiration DTE for a balance between premium and time decay. Many traders prefer 30 to 45 DTE. Fourth, strike selection. Practical rules. Aim short strikes around the 10 to 20 delta for each short leg, that is OTM puts or calls by long wings. Further OTM such that both spreads have equal width, e.g. 10 to or 15 points width. This gives defined maximum loss, equal width minus net credit. Seizing and risk. 5. Position seizing, risk only a small percent of portfolio on any single condor. Example, 1 to 3% of account equity. Compute maximum loss equal wing width contract multiplier, that is 100 minus credit received 100 used for position size. Example, $2 wide wings, $0.50 credit. Maximum loss per condor equal 2.00 minus $0.50. Multiply 100, that is $150. Entry placing the trade. Or 6. On your broker's trade tab, open the strategy builder and select Iron Condor. Same expiry for all 4 legs. Pick strike size chosen. Ensure the order type is limit and check net credit and fees. Tasty trade. Thinkorswim let you draw strikes visually, confirm commission fees and buying power impact. Minimum profit. Target rules in practical. 7th, minimum profit plan. My practical rule set you can use. Aim for net credit that gives a probability of profit 60 to 80%. Short strike 10 to 20 delta helps this. Take profit exit at 50% of the maximum profit, that is close if you can buy back the condor offer of the credit you received. Many traders use 30 to 60%. Take profit depending on risk appetite. Set a stop adjustment rule. Close or adjust when the Unrealized loss reaches 100% of the credit or when the underlying moves beyond a preset trigger, e.g. short strike plus assigned buffer, or if you maintenance margin rises above your comfort levels. Alternatively, close if the position theoretically maximum loss remaining exceeds X% of your risk budget. Practical value 60 to 80% of maximum loss. Consider rolling or ending early if the underlying is approaching your short strikes with 15th. Rising, don't wait for expiration assignment. Adjust by widening wings, rolling out in time or converting to iron fly depending on scenario. Monitoring and expiration. 9. Monitor daily for fourth changes, price movement and margin use alert for when underlining recharge short strikes or when profit or loss hits your TP or SL level. 10th, if you keep the trade to expiration, be aware of assignment early exercise risk, ESP and American style options if in the money. Most traders prepare to close or roll before the final 1 to 3 days to avoid assignment and gamma risk. Post-trade review. 11th, log the trade entry, exit, why you took it, POP realized PL, what you would change, continuously improvement is essential. Practical rules to get minimum profit, that is consistent small wins. Trade liquid symbols, tight spreads, execution matters. Use 30 to 45 days. DTE and short strike 30, 10 to 20, delta to bias towards higher POP. Require a minimum net credit that yields a target ROR. You accept EG aim for 50 to 35% of maximum risk. Adjust to your comfort. If credit too low versus width, skip the trade. Always use limit orders and check all 4 legs fill the. If the spread does not fill cleanly, cancel. A fixed exit rules take profit at 30 to 40% of maximum profit, close or adjusted 100% of credit loss or on short strike breach. These rules convert a trade into a repeatable process that logs many small wins. Caveat specifics depend on your risk tolerance and account size. This is process guidance, not this personalized financial advice. This is the simple diagram. Iron Condor payoff, expiration profit, price of underlining long P, short P, short C, long C, strike axis OTM puts on left, OTM calls on right, short put spread credit, short call spread credit, net credit, total premium collected, maximum loss, wing width, net credit. Graphic notes label the 4 strikes, e.g. put long 95, put short 100, call short 110, call long 115. Show credit collected in the central flat zone. Now begin voice over script, direct step by step. Read it 122 150 WPM. Hi, today we will build and manage a short Iron Condor to aim for steady minimum profit. Step 1. Make sure your brokerage account is approved. For options trading, brokerage required application and assign approval level. Step 2. Pick a liquid underlining, for example, SPY or QQQ, and look for options with tight bid-ask spreads. Step 3. Select on expiration about 30 to 45 days out. Step 4. Choose strikes so that short call and short put are around 10 to 20 delta by protective wings, the same width on both sides. Step 5. Confirm the net credit and calculate your maximum loss. That's swing width minus credit times 100. Step 6. Place the Iron Condor as a single strategy order with a limit price. Then monitor daily. Step 7. Set rules. Take profit when you can buy back the position for 50% of the credit. Close or adjust if you lose the full credit. Close or adjust if you lost the full credit or if the underlining breaks your short strikes. Step 8. If you close the expiration, consider closing to avoid assignment. Finally, always size position so the maximum loss fits your risk budget and log every trade for improvement. That's the short Iron Condor A defined risk income style strategy that can produce reliable minimum profits when managed with clear rules. Adjust phrasing as you like, record in short sentence and add pauses for diagrams. 5 most important web sources I used for your description teaching slides. Tasty Trade, how to build Iron Condor on platform strategy builder. This is the most important websites you will find out clearly. Investopedia, Iron Condor explanation and step checklist. Jet Trader, Trader Return Write-ups, Practical DTE and POP guidance 30 to 45 DTE and POP 60 to 80%. So, broker, doc and FINRA options approval and regularity requirements. Platform example tutorial. Thinkorswim, Tastyworks for entry, dragging strike, and 3 growth penny stocks, current last price, last close price and short growth. Note USA listed OTC. Important penny stocks are highly volatile and speculative. I am showing current market quote size available on public sources. Closing price near November 26-27, 2025. Do your own due diligence. Jomodica Corporation, ticker JOMODF. Recent close $0.11 per share. Late November 2025 data. Growth note: Jomedica is a veterinary diagnostic animal health company. Growth narratives are typically tied to new product adoption in vet clinics and recurring consumables. Revenue expansion depends on product uptake and distribution deals. High volatility. Watch adoption data and balance sheet. Ideanomics, Inc. Ticker IDXQ. Recent quotes. Penny near zero levels with intraday volatility. Example show $0.01 to $0.04. Swings in November 2025. Micro price behavior. Use live quote for exact growth note. Idenomics is a diversified holding focused on EV and fintech verticals. Turnaround narratives often depend on successful execution of EV infrastructures, deals, or monetization of businesses units. Extremely speculative. Check filling for cash runway. Sundial Growers Inc. Ticker SNDL. Recent close $1.70 to $1.80. Late November 2025. Growth Note SNDL is a cannabis producer retailer that has focused on restructuring retail expansion and licensing growth drivers including consumer market recovery, margin improvement, and strategic partnership, but regulatory and product risk remain. Pick how they could grow. Summary, one line each. Zomodica, growth of veterinary product adoption scales, recurring consumer revenue created. Ideanomics, growth only if EV fintech segments successfully scale, large revenue recognition and large contracts. Sundial, growth via retailer footprints, product margin improvement and industry consolidation. Regularity and regional sales matter. Short disclaimer, use on screen and read. This is the educational information, not financial advice. Options and penny stocks are risky and can cause total loss. Consult a licensed financial professional and verify live prices before trading. Part 1. Mark example trade. Now begin mark example trade practical. Below is a fully worked practical real world style short Iron Condor example you can show in your video. Mark Iron Condor example SPY. Numbers are realistic but for illustration, not live prices. Underlining SPY trading at $510. Expiration 30 DTE. Next month cycle. Strikes Iron Condor. Put side bull put spread. Sell 495 put. 15 delta. Buy 490 put. Wing. Call side bear call spread. Sell 525 call. 15 delta. Buy 530 call. Wing. Width of wings 5 each. $5 each side. Credit received. Put spread credit $1.25. Call spread credit $1.15. Total net credit $2.40. Maximum loss calculation. Wing width 5.00. Credit 2.40 equal 2.60. Maximum loss $260 per contract. Maximum profit $240 per contract dollar. $240 per contract. Probability of profit POP 65 to 75% because short strike are around 15 delta. Take profit rule. Minimum profit method. Close at 50% of credit. Buy back when price dropped to $1.20 net debit lock, $120 profit stop loss rules. Close adjust if loss reaches 100% of rate. If Condor cost $4.80 to close, exit to limit damage. Iron Condor summary code used on slides. Buy price 510, sell price 595. Buy 490, sell 525. Buy 530. Trade $2.40. Maximum profit $240. Maximum loss $260. POP 70%. TP 50% of trade. SL 100% of trade. DTE 30. Part 2. Slide by slide voice over script. Slide 1, title Short Iron Condor Strategy, a practical step-by-step guide. Today we are breaking down the short iron condor, the safest way to collect small consistent profit in the US option market. Slide 2, what is a short iron condor? The short iron condor is a defined risk trade collecting option strategy. We sell an out of the money call spread and an out of the money put spread in the same expiration. We profit if price stays inside our range. Slide 3. Why trader use it? This strategy is built for minimum profit with high probability thanks to time decay, falling volatility and neutral price action. Slide 4. Step 1. Pick the right market, choose highly liquid ticket like spike, QQQ or AAPL. Liquidity ensures fast files and tight bid-ask spreads. Slide 5. Step 2. Select the best expiration. Use 30 to 45 days to expiration. This window gives maximum time decay benefit and high probability. Slide 6. Step 3. Choose strikes. Pick your short call and short put around 10 to 20 delta. Then buy wings further out of protection. Keep both sides equal width. Slide 7. Step 4. Place the trade. Enter the iron condor as one combined limit order. Confirm your net rate and the margin impact before submitting. Slide 8. Step by 5. Profit and stop loss rules. Take profit at 50% of the crate and protect your capital by closing if the loss reaches on 100% of the credit. Slide 9. Slide with mark example. Trade SPY. Here is a real world example. SPY at 510. Sell 495. Put. Buy 495. Put. Sell 525. Call. Buy 530. Call. Total credit 240. Maximum loss 260. Probability of profit about 70%. Slide 10. Final tips. Manage your trades. Never hold risky position to expiration and stick to your rules. Small but consistent wins build long-term wealth. This is total short iron condor strategy, a practical step-by-step guide. What is you will see. Please like, subscribe and comment. Another video is there, that is 2.5 minutes. I will guess your art touch video.
Yes.
The Iron Condor is a popular option strategy designed for traders who expect minimal movement in the price of an underlying asset. It involves selling one out-of-the-money put and one out-of-the-money call, while simultaneously buying a further out-of-the-money put and call, all with the same expiration date. This creates a range in which the trader can profit if the asset's price stays relatively stable. The strategy generates income through the premiums collected from the sold options, while the purchased options provide protection against significant price moves. For example, if a stock is trading at $100, an Iron Condor might involve selling a 95 put and a 105 call, and buying a 90 put and a 110 call. The net credit, or maximum potential profit, is the total premiums received minus the premiums paid. Maximum profit is achieved if the stock remains between the sold strike prices at expiration, while losses are limited if the price moves beyond the bought strikes. This makes the Iron Condor a defined risk, neutral strategy that benefits most when market volatility is low. Among penny stocks with notable growth potential, Iteris, AEVA Technologies, and High Tide stand out for their recent developments and sector positioning. Iteris operates in the infrastructure and artificial intelligence sector, benefiting from increased government investments and AI-driven solutions, with revenue growing by 17% in 2023, and analysts forecasting ongoing profitability. AEVA Technologies focuses on autonomous vehicles and LiDAR technology, with advancements in these fields fueling expectations for significant share price gains. High Tide is a key player in cannabis retail, showing strong performance in Canada and eyeing expansion opportunities in the US market. While these companies offer exciting growth prospects, it's important to remember that penny stocks are highly volatile and carry substantial risk. Investors should approach these opportunities with caution and conduct thorough research before making decisions.
Thank you, my dear friends. This is the YouTube creators please Google ads, subscribe and grow your channel. And last one is mine. Please like and subscribe, comment, any comment. Thank you, my dear friends. We will meet tomorrow video.